Welcome back to the Macro Gamer channel. My name is Mark Cassingham. Today we're going into our weekly numbers for week 68. This is as of November 9th, 2025. This is on Sunday. I couldn't do it yesterday, which is fine, but we're going to do our numbers today. So we're going over our weapons of finance. This is our shield part of our strategy. So this is our primary portfolio. It's a defensive strategy focused on preserving and protecting wealth, continuous and stable returns, balanced diversification, global economic resilience, and dynamic management. So just a quick high-level overview of the portfolio. We have our current portfolio net worth as of week 68. We're currently at $888.21 with a total gain of $124.34. with a money-weighted return of positive 30.50%. We have portfolio weekly data for week 68. This is the past 7 days, going back to October 31st, so 2 days before today, going back. We have a we have a loss of $2.78, and we have a money-weighted return of minus 0.31%. 0.31%. So we gave back last week. We're kind of going sideways right now. Then we have our portfolio monthly data for week 68. This is the past 30 days, going back to October 7th. We have a loss of $3.22 and a money-weighted return of minus 0.37%. 0.37. So now we have our first loss in a while on a monthly return, but it's 0.37%. Very minimal. Then we have our quarterly data for week 68. This is at the past 90 days, going back to August 7th, 2025. We have a gain of $66.18, and we have a money-weighted return of positive 8.75%. So this is the past 90 days. Then we have our yearly data for week 68. This is the past 365 days, a full year, going back to November 7th, 2024. We have a gain of $113.84 and a money-weighted return of positive 22.55%. So as I always say, the yearly return is the thing I focus on the most. The 5 to 10% is my operational performance. Anything above 10% is optimal performance. And we're still above 20%, which is stupendous performance. So it could come way down and I'll still be, at a optimal or operational performance level. So I'm still doing great. We're just having a slight pullback on our gold position. Then we have our all-time data. So for week 68, so since portfolio inception of July 19th, 2024, when we first opened the portfolio, we have a gain of $124.34, and we have a money-weighted return of positive 30.50%. So this is the whole picture. Right? Then we have our weekly percentages for week 68. So as you can see, it's mostly red. Gold was barely positive 0.05% for the week. And our positions have remained unchanged. So we have gold at 45% with our GLD ETF. We have commodities at 15% with our USCI ETF. We have bonds at 15% with our GOVI ETF. We have US dollar at 10% with our UUP ETF. We have stocks at 10% with our RSP ETF. And Bitcoin at 5% with our IBIT ETF. So like I said, it's been a pretty flat week. So if you want to pause and look at the video, you can see the numbers. Then we have our monthly data. So the past 30 days for week 68, still relatively flat, not much happening. Again, gold at 45%, it's only up 0.55%, so it's gone kind of sideways. Bitcoin down 15%, big hit for Bitcoin, We can pause the video here. And we have our quarterly data, so the past 90 days for week 68. You see our numbers here. We still have good returns on gold at 17%. Some better numbers here. So if you have a longer time horizon, the numbers look a little better. We can pause and watch or see the numbers here. Then we have our yearly data for week 68. So going back 365 days, Bitcoin came down at 22% now over the year, which is really, really low for Bitcoin. Gold's still above 50%. So still doing good for gold. Then of course we have our all-time percentages. Keep in mind that GOVI, our bonds, and IBIT, our Bitcoin, are not in the full time of the all-time. We got added in later, or we swapped ETFs. This is for all-time week 68, so you can see the numbers. We have our persistent changes since the beginning. We haven't done anything. Still haven't done anything. Still keeping it the same. I'm still watching gold. Gold's just dominant still, even though it pulled back, it's still dominant. So we're keeping it as a dominant position in the portfolio. We have no portfolio transactions this week. We have our Illuvium staking dashboard for week 68. So we have a current ILV price of $10.83. We currently have 33.49 ILV staked. Gives us a total value of $362.66. See our dashboard here. We have our Illuvium investing for week 68. So we have 3 pages worth. So I have 4 that I can withdraw at the moment, and 2 more on this page. Then page 2, we have more that are locked up here. Then page 3, our most recent lockups, and our most recent one was on October 28th, where we locked up 3.4 ILV. And we showed that last week, our transaction. And we have our Illuvium revenue distribution for week 68. So no new revenue distribution, just the original distribution payments of 0.024 ILV, which is a current price of 26 cents. And no Illuvium transactions. All right, so that's for our weekly numbers. Now we can look at our charts. You can see gold is still well above its trend, even if I extend these lines out, just a long trend line out. Just like that. So you can see it's well above it. So we peaked at October 20th and then pulled back. Now we're starting to go sideways, but if we zoom out, we go all the way back to October of 2023. This trend is still up and to the right. Right? Up and to the right. So just like back in April 7th, around that was during the tariff announcement week, or global tariff week, I should say, shot up, and it bounced around. I kept wanting to go up, but it kept getting rejected, and then just on August 28th, it just started skyrocketing, literally. And then it peaked again on October 20th and started to pull back. So we don't know what's going to happen yet. It might consolidate again, just like this, or it might crash down. If it crashes down, maybe I might lower my position. I don't know. We'll see. But this big blow off top, it was such a huge run up. That's why it's like that. Okay. We have our commodities, our USCI. So look at it on the 5-year, just for context. So going back to the beginning of the COVID pandemic in March 2020, commodities have been up and to the right because money printer have been crazy. We have our lower trend where it was going up for a while. Then it came up into this upper trend. And now it's above the upper trend. So commodities still doing very good. Still very high. We'll just extend this out a little bit. Just a little bit. There we go. All right, so commodities still doing good. 15% of our position. Bonds. Bonds. So bonds, I hate bonds. I say this every week, I hate bonds. So going back, again, COVID pandemic, bonds have been horrible. But we did have this bottoming in October 2023, and it's been going kind of sideways ever since. Or not? Oh yeah, pretty much sideways. A slight uptrend at the bottom happening, and then there's been a pullback here. So I don't know if it's time to get into bonds yet, because maybe gold is peaking. I don't know. We'll see. But bonds have been doing just pretty mediocre. U.S. dollar still doing really good. Still coming up now in this trend right here. Let's look at DXY, where are you, DXY? Oh my god, I'm blind. There we go. So it got rejected at the 100 line, which of course it did. Big round number. Investors love big round numbers. All right, so if we go back to 2008, March 2008. This has been a steadily climbing trend up and to the right. But it's a currency, so it doesn't move up very fast, so no one really notices it. But people saying like dollar selling off, it's weak. Well, it's still in this big uptrend, since 2008. So it's still doing good. And it's just getting rejected at this 100 line. This might be the next play right here. Might have to invest some in US dollar. Because we have it at, was it 10% right now? So we'll have to see. But US dollar is kind of coming up, turning around, starting to come up. Our stock, our equal weight, our equal weight's crashing below that line. That's not good. Let's see, step our line just so we don't have to worry about this later. There we go. So it's still kind of around the previous high back in December of 2024. And it's just kind of bouncing around. If we look at our S&P index, it's kind of a big sell-off actually. Look at that. It's got the droopy dick pattern. Like that. So it just kind of come down, just looking real limp right here. Just real limp. So it got rejected off that top line. If we go back, these lines go back to November of 2022. Just been kind of going up and up and up. Had a couple big sell-offs. But for the most part, it's been staying in this trend. So it is getting rejected right there, but it could stay in this trend still. So we're just going to keep watching. And then Bitcoin getting really sold off here. Not looking good, although I think right now it's actually coming up. I think there's an announcement about not COVID checks, tariff checks now. I think Trump just put out a tariff checks tweet, so crypto people are getting excited. They're going to get more stimulus money. Not shocking at all. But if we look at our long-term trend, it's going back multiple years. So we go back to the 2017 peak, the two 2021 peaks, 24 and 25 peak, and now we're kind of struggling around this area. This 120 line is really difficult, as well as this long-term red trend line. So we're watching to see what happens. Bitcoin is kind of getting rejected. It's bouncing around the 100 line. Whew. But anyway, that is our update for the week. So as always, this is our weapons of finance, our shield strategy. So this is our primary portfolio. This is the one we care about the most. This is a defensive strategy focused on preserving and protecting wealth, continuous and stable returns, balanced diversification, global economic resilience, dynamic management. And again, just giving a high-level overview. Just want to preserve and protect money. That's the focus of this portfolio, and this is our weekly update. So as always, thank you for watching, and have a good day.